Imagine waking up to find that while you were sleeping, money flowed into your account. Not because you worked overtime, not because you sold something, but simply because the financial system you've built is working for you. That's exactly what happened to me this morning. I opened my brokerage app to see that 3 of my dividend stocks had paid out. Money earned while I slept. When the market's going crazy and growth stocks are making headlines, people often ask me, why even bother with dividend stocks? I always smile at this question, because unlike most investors who've only seen bull markets, I understand something crucial. Financial freedom isn't just about growing wealth, it's about creating sustainable income. Today, I'm answering the question I get asked more than any other. How much money do I actually need to live off dividends? Stay with me through this entire video, because I'll show you exactly how regular people can build extraordinary dividend income without needing millions to start. But before we dive in, if you find value in this content, do me a quick favor and hit that like button, subscribe to the channel, and let's jump into it. When people ask how much they need to live off dividends, they're really asking about financial freedom. That moment when your passive income exceeds your expenses and work becomes optional. Here's the thing, that number is different for everyone. If you're living in San Francisco or New York, you'll need more than someone in a lower-cost area. If you want to travel the world, you'll need more than someone happy with a simpler lifestyle. But what most people don't realize is that dividend freedom isn't about having a massive lump sum from day one. It's about building an income-generating system over time. The biggest misconception I see is people believing they need $2 to $3 million in investments before dividend investing makes sense. That's simply not true. And today I'll prove it to you with real numbers, real strategies, and a blueprint anyone can follow. Before we look at specific numbers, we need to understand what dividend investing actually is. It's not just about collecting a yield check. It's a total return strategy focused on companies that share their profits with you as a part owner. I'm a big believer in the power of compounding, which is why I focus primarily on dividend growth stocks, companies that increase their dividend payments year after year at significant rates, often 10% or more annually. Think about dividend investing like planting a money tree. The first few years, that tree doesn't produce much fruit. But with proper care, reinvestment, and patience, the harvest becomes more abundant each season. Most dividend investors make the mistake of focusing too much on the initial yield, how much the tree produces in year one. What matters far more is the growth rate of those dividends over time. A 2% yield that grows at 12% per year will produce far more income down the road than a 5% yield that barely increases. This dividend snowball starts small, but builds tremendous momentum over decades. Let me show you 5 examples of what I call freedom-building machines, dividend growth stocks with impressive track records. First is Broadcom, ticker AVGO, currently offering a 1.33% dividend yield. Not impressive at first glance, but here's the key. They've grown their dividend by 14% annually over the past 5 years and have increased dividends for 14 consecutive years. Home Depot, ticker HD, offers a more substantial 2.6% current yield combined with a 10% 5-year dividend growth rate, and they've raised dividends for 15 straight years. NextEra Energy, ticker NEE, provides both a solid 3.37% current yield and impressive 10% 5-year dividend growth with an incredible 29-year streak of dividend increases. Tractor Supply Company, ticker TSCO, starts with a modest 1.81% yield, but has grown dividends at a remarkable 26% rate over 5 years with 14 consecutive years of increases. Finally, Devon Energy, ticker DVN, offers an attractive 4.21% current yield plus a 25% 5-year dividend growth rate, though their streak is shorter at 7 years. These aren't just stocks, they're partnerships with companies that are committed to sharing growing profits with you as a shareholder. I could list dozens more examples, but today isn't about building a stock watch list. It's about understanding how these dividend growth machines can transform your financial future. Now let's explore 3 different journeys to dividend freedom, starting with different amounts but following the same principles. The first journey is what I call the early starter. This investor begins with $20,000 saved up and commits to investing $1,000 monthly. Their portfolio yields 3% initially, and they focus on dividend growth stocks averaging 12% annual dividend increases. In year 1, their dividend income is modest, only about $600. By year 2, they're earning $1,056 in dividends. Not life-changing money, but remember our money tree metaphor. It's just starting to grow. By year 5, annual dividend income grows to $2,934. By year 10, it reaches $8,772. The snowball really starts rolling by year 15 with $21,252 in annual dividend income. Year 20 brings $48,141, and by year 25, they're collecting $106,837 in annual dividend income, all from an initial $20,000 plus consistent monthly investments. Our second journey is the mid-career builder, someone starting with $50,000 who can invest $1,500 monthly. Their portfolio has a slightly lower yield of 2.5% because they're focusing even more on dividend growth potential. In year 1, they earn $1,250 in dividends. By year 5, that grows to $4,489. Year 10 brings $12,383 in dividend income. By year 15, they're earning $28,781 annually from dividends. Year 20 sees $63,035, and by year 25, they're collecting $135,349 in annual dividend income. But let me show you how crucial that dividend growth rate is. If we reduce the growth rate from 12% to 10%, that final number drops dramatically to $78,322. This is why I emphasize dividend growth over initial yield. Those seemingly small percentage differences compound into life-changing amounts over decades. The third path is the accelerated approach, starting with $100,000 and investing $2,500 monthly with a 2.5% initial yield and 12% dividend growth rate. Year 1 brings $2,500 in dividends. By year 5, it's $8,201. Year 10 sees $22,075 in annual income. By year 15, they're earning $50,871 from dividends alone. Year 20 brings $110,997. And by year 25, they're collecting an impressive $237,902 in annual dividend income. That's almost $20,000 per month without selling a single share. True financial independence by any standard. Now here's the part that surprises most people. In that third scenario, the total amount invested, not including dividend reinvestment, just the money transferred from your bank account to your brokerage, was $670,000 over 25 years. Yet by the end, you're earning over $100,000 annually by year 20 and over $237,000 annually by year 25. You've essentially built your own pension plan that now pays you more than a third of your total lifetime investment every single year. And remember, this doesn't even account for the appreciation in share prices, which would likely make your portfolio worth significantly more than what you invested. This is the true power of dividend growth investing, turning reasonable sums invested consistently over time into extraordinary income streams. Think about what this means in practical terms. At $100,000 in annual dividend income, that's over $8,300 per month, enough to cover most people's expenses with room to spare. At $237,000 annually, you're earning nearly $20,000 monthly without touching your principal. This isn't just financial security. It's complete financial freedom. A critical point I need to emphasize. Dividend growth investing isn't about chasing the highest yields or jumping from stock to stock. It's about investing in high-quality businesses with strong free cash flows that can sustain and grow their dividends year after year. Every company I invest in must demonstrate the ability to generate consistent cash flow through different economic environments. The dividend is simply your share of those profits. When you own dividend growth stocks, you're essentially hiring teams of thousands of people working tirelessly to increase your income through their business operations. Their success becomes your success. Their growth becomes your growth. And most importantly, their rising profits become your rising income. This is why I sleep well at night, regardless of market volatility. When you focus on companies with strong free cash flow and consistent dividend growth, short-term price fluctuations become far less concerning. You're not dependent on selling shares at the perfect time. Your income comes from the operational success of real businesses. So let's wrap this up with the simplest truth. You don't need to start with $1 million portfolio to achieve meaningful dividend income. You don't need to be wealthy to build wealth. What you need is a consistent approach, quality investments focused on dividend growth, and most importantly, time. The dividend freedom blueprint I've shared today isn't theoretical, it's mathematical. It's the same path that thousands of investors have followed to financial independence. Whether you start with $20,000, $50,000, or $100,000, or even less, the principles remain the same. Focus on quality companies with strong cash flows and consistent dividend growth. Reinvest those dividends religiously during your accumulation phase. Add fresh capital as consistently as you can. And give the power of compounding the time it needs to work its magic. In the comments below, I'd love to know what's your personal dividend freedom number. What annual dividend income would allow you to live life on your own terms? Share that below. And if you found value in today's video, please hit the like button and subscribe to the channel so you don't miss our future content on building wealth through dividends. Until next time, remember that financial freedom isn't about getting rich quick. It's about getting wealthy systematically.